What's going on, everybody? It's Stas here. So the markets were all over the place today. We had the S&P and the Dow go down 0.2%. We had the NASDAQ 100 barely pull a green day, and the Russell went down 1%. So in this video, we're going to break down some technicals, go over stocks I'm looking at, and like you guys saw in the title, we're going to be talking about AMC and GameStop, which went absolutely parabolic today. So sit back, relax, take a sip of your, oops, I knocked the laptop there. Take a sip of your coffee, guys, and let's get right into the video. So look, SPY, like I said, went down. Pretty much the markets in general went down today, other than the NASDAQ 100. And you guys can see on my watch list on the left, we're pretty mixed overall. We have some red stocks, we have some green stocks, but admittedly, most of them are green, as you guys can see. But looking here at SPY, which tracks the S&P 500, what we're noticing is a clear failure to break above 420, 421, which was that high point from yesterday and pre-market today. In fact, we pretty much sold off all day today. We popped up initially in the pre-market, right? But once the market open hit, we popped up at market open as well. And then from there, we sold off all the way to 417.50, which held, which is a good sign considering 417.50 was that double top resistance from last week. So the fact that we held that as support into the close of the market, we rallied up and closed above 418. Now we're up after market hours as well. This is a good sign that SPY had some profit taking, simply some weak hands being shaken out, and this could end up being a dip buy. It very well could end up being a dip buy, and if we end up seeing buyer step in tomorrow, and let's say, for example, we break the downtrend we saw today, we slowly start filling the gap back up to 420 with volume kicking in, that would be a sign that it would be a dip buy, right? But the second we break under 417.50, maybe we sell off a bit further from there. Maybe we go down 415 again. Who knows? Maybe we go down to 408 to 410, which could be a higher low spot on this chart. And let me get my handy dandy oval tool out to show you all exactly where I'm talking about. Who knows? If 417.50 breaks, we might fill this gap down to about 408, 410 on the lower end. So don't be surprised if that were to happen, right? So overall for tomorrow, 420, 421, and 417.50, I'd say those are the three biggest levels to keep an eye out on when it comes to SPY here. And QQQ, let's pull that up. You guys can see a lot of similar price action compared to SPY, right? We're noticing how we popped up pre-market, we broke above 333, we were trading at about 334, almost 335 for a little bit, and then we saw a pullback pretty much all day. You guys can see on the intraday chart, well, not really all day. I'd say the first 1/3 of the day, we pulled back from 334 to about 332, and then from there, we pretty much coasted for the rest of the day, not breaking under 332. In fact, we held it for the rest of the day, and now we're popping up after hours above 333. So tomorrow, very simple. I want to see if 333 breaks on QQQ, which after hours, like I said, it is, and I want to see if we start getting a push towards the high from pre-market. And if we do break that high, expect a 337 price on QQQ, which was the resistance from earlier this month. If that were to break, probably 339, 330, 950, maybe 340 is where we could be going. So watch out for these levels on QQQ and SPY. We had gold do well today. Gold went up 0.8%. Silver went up a whopping 0.8% as well. And the VIX did have a green day. VIX was up 2.4%, which is the volatility and the fear index. So we are seeing volatility moving up a bit. The precious metals are up. That is a sign of, hey, pulling back, profit taking. We're seeing a bit of volatility, but I don't think it's going to last. Again, I feel like this dip is going to be bought up and we're going to be going higher, but who knows? I could be wrong. I've been wrong in the past, and like I always say to you guys, don't buy or sell based on my opinion. I'm not a financial advisor. I'm just here breaking down what I'm seeing through my charting process, and that's just the truth of the matter. So let me know your thoughts down below. Feel free to smash that like button if you all are enjoying the video so far, and don't forget to get your 2 stocks from Webull and your $30 from M1 Finance. Those are linked right down below, and they're free of charge to you. So let's get into some stocks now, and like you all saw in the title, AMC, GameStop, absolutely ridiculous day today, and we can see with AMC, guys, this went up 20%. It closed at $16.40 and it went up all the way to $16.90 after market hours, and now it's hovering at about $16.20. So it is down a bit after hours, but still you could argue that the uptrend is continuing into the after hour session, and who knows, maybe 16 is the new bottom before we end up ripping up. So it looks like when there's momentum shifting out of the crypto names, the crypto hype plays like Dogecoin, some of the other coins that we're not going to get into in this video, it seems like people are shifting back. The momentum's going into the meme stocks now, GME and AMC, and that's just the type of market we're in. We have momentum flooding from crypto to certain stocks, back to crypto. It's just a cycle, and I believe that is what we're seeing right now. Whether it's all the crypto money coming here, I mean, that's unrealistic. It's not all the crypto money, but it is the speculators out there. They're just simply shifting into these stocks, because from what I'm seeing, this is purely a momentum-based move. There wasn't anything drastic when it comes to fundamentals today, unless I'm missing something. And we notice how AMC short interest is right around 20-25% for my research from what I've seen right today, and that's the same for GME. They're both about 20-25%. And the funny thing is, guys, I got in AMC. Well, that's not funny. I guess that's a good thing considering how well it did today. And I bought in at $12.70 a couple days ago. It was last week. And I sold out a little bit yesterday and all of my position today. But the funny thing is, I guess it is a little funny. I sold out at $14.70, right? So I'm a little bit mad about that. I'm not going to lie, but the truth is, when you're a trader in the market, you have to stick to your plan. And my initial plan was to sell out at about $14.50 to $15, considering that was the resistance from a couple months ago. Also, recently, you guys can see that was resistance. So my plan was to get in $12.70, ride it up to about $15. I did exactly that. So in that case, I shouldn't be mad at myself. In fact, I'm happy, but there's always that greedy side of me that comes out sometimes. And he's like, Stas, you should have just held, man. You should have diamond handed it. You'd be up another 10 whatever percent right now. But then I'm like, okay, greedy Stas, leave me alone, man. I executed according to my plan and I made money. And that's what you got to do, right? You can't get too greedy. Yes, you do feel that emotion of greed sometimes, and you get mad if you sell out early. But the truth is, you just gotta stick to your plan and move on to the next. And at this point in time, I believe AMC, yes, I think it could get to $20. That is where it was. Well, it got to 25 a couple months ago, but overall it topped out at about 20, and I think we could end up getting there. But in the short term, I think we are going to pull back. We are going to see some choppiness, and maybe I can get a re-entry. That's the beautiful thing about the stock market. It's open every Monday through Friday for the most part, and there's always another day to buy. Just because I sold out doesn't mean the world's over. I can get in on a dip. And let's say, for example, AMC were to pull back to 13.50, maybe into the 12s again, which is very possible before it rips up to 20. If that were to happen, that's where I'd buy back in, right? That is where I'd buy back in. But overall, very bullish day for AMC. We broke 1490, broke above 1580. That was the high from about a week ago. And now, like I said, we're overbought. But then again, momentum could push this thing even higher, even though we're overbought. So keep that in mind as well. And if that ends up happening, we're going to make a lot of money, at least the people that are still in AMC, and I'd probably figure my way back into AMC somehow on that momentum. We'll see. But overall, what a day with this stock. We're seeing crazy push into these meme stocks again. And GME, oh, and by the way, I forgot to mention, if you guys want my real-time buy and sells, check that out on Patreon. I post all of those every single day whenever I'm making moves, whether it's trading, options trading, long-term investments. I'm putting everything on Patreon. Check that out, link down below. And yeah, let's get into GME now, which ended up doing very well. Not as well, but still, it did very well, closing up 16%, up almost $30 on the day. And notice how, well, this chart looks a bit ugly. Let me fix this chart. There we go. Notice how recently we broke out of the wedge on the hourly chart here, right? We broke above the moving averages as well. We saw the golden cross. In fact, we're still seeing the golden cross. And now with today's massive move, we broke out of that 190 resistance, not only from last week on the 18th of this month, but you can also see that's been a resistance ever since the end of April. So at this point in time, yes, like AMC, this is pretty overbought, but I could see A, the momentum go higher, obviously, like AMC, and B, I can see it pulling back a bit, but not going much under 200, 195. I think it could end up consolidating here a little bit before the next rip up, and that could be anywhere. And you may ask, Stas, where could that be? Well, that could be anywhere from 280, maybe upwards. On the higher end, maybe 350, and will it go back to 513, guys? I don't know. I mean, I don't think it will. I feel like that was a once-in-a-lifetime event, what we saw back in January, what happened with Wall Street Bets, the suits. I mean, could it go there again? Yeah, I mean, anything is possible, but I'm not necessarily banking on it. I would definitely say a more realistic spot would be 290, maybe 350, and even that 350 is pushing it. But then again, who the heck knows with these stocks, guys? But overall, they're breaking out. They are exploding. I think there's more upside, but you have to be careful. You have to trade at your own risk, as always. And when it comes to GME and AMC and any other speculative stocks for that matter, in my opinion, again, I'm not a financial advisor, but I don't think you should be playing with a lot of money, right? Let's say your net worth is 50K, or let's say 10K to keep it simple. Let's say you have 10K to your name. You shouldn't be going all in with 10K in GME and AMC, in my opinion, right? Maybe you could go with $500, $1,000, even $1,000 would be pushing it. That's 10% of your net worth. I think that's a little extreme as well. But hey, you're free to do what you want. I personally would stick to less than 1-2% of my net worth, trading stuff like this. And that's what I'm doing. Even less than that, guys, even less than that. I'm not even putting that much. I wouldn't put that much into something like this unless I was feeling crazy Vegas style gambling stocks, which never really happens considering I don't even gamble. I mean, I've been to Vegas once. I go to Atlantic City here and there, but I really don't gamble, and I don't even like gambling, to be honest. But overall, those are some thoughts on AMC and GameStop. I'd love to know yours down below in the comments. The next stock I'm looking at here is Intuit, ticker symbol INTU, and they just reported earnings today. They missed both on EPS and on revenue. Not too good. EPS came in at 6.07 versus 6.47 estimated, and revenue came in at 4.2 billion versus 4.41 billion estimated. So a double miss there. But it's okay because guidance came in above estimates. They actually raised guidance for full year 2021 EPS from 820 to 840. That was what it was initially, to 932 to 937 versus the 849 estimated. So EPS got raised a ton. It's beating the estimate, and revenue also rose from 8.1 or 8.81 to 8.99 billion to 9.36 to 9.4 billion versus the 9.06 billion estimated. So they missed EPS, missed revenue, but they raised guidance for both EPS and revenue. revenue, and they expect the next quarter sales growth to be around 26 to 28%. And it doesn't take a rocket scientist to see that Intuit is pretty overbought. We're towards the top of the channel, and we're above the moving averages here on the 4-hour chart. And sure, it could go up more. I mean, it very well could, but that's saying that it's going to break 450 and then moon up to 460, 475. I'm just not buying that in the short term. I think this actually could be setting up for a pretty decent short, although I don't short the markets. Quite honestly, I don't. I mean, sometimes I buy put options, which is a little bit different, but I feel like this could be a play maybe back towards 420. If it pulls back to 420, then maybe some buyers start stepping in to pick up that dip. But until then, I'm not forcing into Intuit at this point. I'm just going to be watching it and figured let me cover it today to bring it to your guys' attention since they just reported earnings. JWN, also known as Nordstrom, is another one that just reported earnings today. They did EPS of negative $1.05, and they did revenue of $3.01 billion. I don't have the estimates on JWN or the guidance, or actually, let me see this. Oh, they just reaffirmed. Okay, this is good. They just reaffirmed full year 21 sales growth guidance of over 25%. Not too shabby there, if you ask me, guys. Okay, there we go. We actually do have the estimates. Here it says, according to this, so maybe they did $2.92 billion in sales versus 2.9. Okay, so they beat revenue, they beat sales, and EPS came in at negative $1.05, like I said, and that's not even close to the negative 57 cents estimated. So EPS missed, revenue beat by a little bit, and they are guiding a decent amount of growth for full year 21 of about 25%. That's pretty solid, and the stock is not having it. The stock is down from $44 as of late. That was just a week ago, guys, and it closed at $36.48 today, down 3% on the day, and after hours, it's down even more. This is pretty ugly. It's down even more after this earnings report came out. It is down another 7%. So maybe if you guys are looking at a reopening play, and again, I'm not telling you what to do, maybe this dip should be respected. Maybe this could be an opportunity. And notice how we're approaching 33, 34. That really hasn't broken as support over the past couple of months. So I personally expect this dip to be bought up. I really think that buyers could step in here and push this thing back to the mid to high 30s in the short term, right? Probably back towards the moving averages here on the 4-hour chart. But the second it breaks 33, 34, which it is now, but it's not fully broken yet. But the second we break, and let's say we start going to $30, that's a different story, right? From a trading perspective, that wouldn't be so great, but obviously if you're looking at it from a long-term investing perspective, valuations come down when the price goes down, so that'd probably be better for you. But me, quite honestly, I'm looking at this more as a trade. I mean, more as a swing trade, I'd say, a couple months at least. So yeah, JWN, I like the sell-off, but I don't want to jump in quite yet since it is a falling knife as of now, but we're still going to be watching it. Toll Brothers is another one, ticker symbol TOL. I believe they reported earnings today as well. They did EPS of $1.01 versus 80 cents estimated, so that beat, and revenue came in at $1.84 billion versus $1.77 billion. That also beat, and I wonder what their guidance was. I'm not seeing that here. Let's see. Q3, they see deliveries of 2675 units, sees full year deliveries of 10,200 to about 10,400 units. Okay, that's not bad. I want to see what that's compared, or how that compares rather, to the guidance. And okay, home sales were up in Q2 to a record of $1.84 billion, up 21% compared to full year 20's second quarter. So that is crazy, and that goes to show how the markets, the home market, housing market rather, has been Unbelievable, right? So Toll Brothers up 2.3% on the close. After hours, I'm assuming it's up a little bit. Yes, it is up a little bit after hours. So I want to see if Toll Brothers, and by the looks of it as of now, it is, I want to see if it continues the uptrend, right? And again, by the looks of it right now, it looks like it is, since we did hold the higher low here at the 180 SMA. Now we're peaking above the 50 SMA, and we're breaking above those highs from a couple of days ago. This high was at about $63 from more like 2 weeks ago. So I think this is a good sign on Toll Brothers. In the short term, we could end up filling the gap up towards 68, 69. That gives it about 8-9% from where we are right now. So Toll Brothers looking solid. That's ticker symbol TOL. I'm also looking at the energy stocks. I know I talk about these a lot, but when I'm looking at the markets right now, a lot of these tech names are still being down and in downtrends. They're trying to reverse. Some are overbought, some are underbought. And I'm looking at a lot of these energy stocks, and they're in uptrends. They're selling off, quite frankly. Even though they're in uptrends in the short term, they're a bit oversold. And I feel like looking at it from a trader's perspective, maybe we could end up picking up some of these dips, right? XOM, ExxonMobil, is down about $6 right now from its peak, down about 8-9%. And as of now, we are holding 58 pretty strongly as support the past couple of days, and that's a good sign considering that's right by the 180 SMA here on the 4-hour chart, and 58, 57.50 was resistance pretty much all throughout, well, the latter half of March, all throughout April as well. So I think buyers could step in here on XOM in the energy stocks in general, and I wouldn't be surprised if we did see a rally on XOM in specific, probably to about $60, $61. So I'm watching out for that on XOM. And CVX, which is Chevron, we're also seeing the same pattern pretty much on this stock. Well, it's a little bit different. This is more of an ascending triangle. You guys can see higher lows are being made, but we are struggling at $113 ever since the middle towards the beginning of March. So on this stock, we're down about $10 from the recent high, right? That's about 7-8%, similar to XOM, and we're trading under the moving averages. That is not a good sign on this stock. XOM was trading under one moving average, but above another. So it's under the 50, but it's above the 180. CVX, which is Chevron, like I said, is under both moving averages. So I would like to see Chevron break back over, let's say, 105, 106. I'm going to put an alert maybe at 106.50. If that level breaks, we'll probably, in my opinion, end up getting a move back towards 110, 112, 113. And we have to look at crude oil /CL. Crude oil is at a sticking point right now, right around 66, 67 a barrel. I think that's going to break. The question is, when is it going to break? And when it does break, I believe the energy stocks are set for another leg up, which is why I am watching them right now. And FCX, the last one for today, is a mining stock. This one is Freeport-McMoRan. I like the dip on this as well. It's down about $6 from the high, down about 11%, 12%, not too bad. And overall, it's holding the uptrend. Look at this. We're making higher highs, higher lows. We're about to reach an oversold spot. I mean, we already are oversold, and right around the 180 SMA is where it's bounced over the past couple of months. So I'm looking at this dip on FCX. Maybe I'll buy it at about $39.40. But then again, I'd feel more comfortable buying on the rebound, which is why I have an alert at $42. So we're going to be watching this. If it breaks 42, the 50 SMA as well here on the 4-hour chart, this could be a play back up to about $45, $46 per share. So I'm watching it for that exactly. So that's it, guys. I'm going to wrap up the video here. I hope you all enjoyed it. If you did, smash that like button, subscribe to the channel, make sure you guys hit the notification bell, and check out my Patreon down below. There's a bunch of exclusive perks. You get real-time buys, sells, call-outs, what I'm doing throughout the day, whether it's trading, options trading, long-term investments. You also get one-on-one access with with me. That's all on Patreon, linked right down below. You could also get 2 free stocks from Webull and $30 free from M1 Finance and $10 free from Coinbase. All of those are linked down below, and that's a free way that you can support the channel even further, and you actually get money on top of it. I do as well, since all of those are affiliate links. So I'll see you all later on. Oh, I almost forgot. Check out that video from earlier. If you guys want 5 extra stocks I'm looking at right now that weren't included in this video, check out my video from earlier. I'll pop it up here. I'll link it down below. I'll see you guys there. Thanks for tuning in. Again, as always, keep crushing the market. Stay safe out there, guys.